Welcome to 2018. This is your first quarter of 2018 update. As you're aware, markets have been doing really well, and I think that they're for legitimate reasons that there are some reasons for markets to go up. But I don't know about this much, and I'll kind of explain the phenomenon in a minute about that. As you're aware, we got the tax package through, and as a result of all the regulations that President Trump killed during the year last year, that has been a real reason why we started to see growth at the 3% level, which is much better than what we had seen for the previous 8 or so years. I'm not being political, I'm just being accurate about what took place. Anytime you make it a more business friendly environment, that's going to help all of us with our investments. So it's been a good couple of years here, and we're looking forward to a decent year again this coming year, and I'll tell you why. There's a lot of optimism. Businesses at the corporate level will only pay 21% tax, those entities that are corporations, not people. People will still pay taxes at their own personal rate, which means the CEO of a corporation, when he gets compensated, he's going to roll that into his own income and at his own tax rate. Corporations are entities, and they're there to serve people. And so the issue is there's not going to be any person being taxed at 21%, but entities will be. And that makes them way more competitive. It will spur much more investment into trying to grow their businesses. But there's another phenomenon that I think is going to happen as well that we're going to have to talk about. I think that it's going to also cause a lot of these businesses to buy back their own stock shares because they're going to have a lot more cash. And I think that's part of what's going on right now, why the market's up as much as it is. Yes, there's optimism, but there are a limited number of shares of stock. If you took all the companies and all the stock out there that's representing those companies, there's a finite number. It's like $307 trillion or something like that. It's close to that number. And that number fluctuates as companies put out more stock. In generally a recession, they'll try to raise more capital by putting out more stock. And then when things get good, they tend to buy them back. Well, there's so much investor activity out there that literally there's becoming somewhat of a potential shortage of shares of stock for the public to buy. And I think that's what's behind some of this phenomenon, much more than just the profits of the individual companies. Just something I'm going to keep my eyes on and take a look at. Kind of goes into what's going on with stuff like Bitcoin and cryptocurrencies. I mean, Bitcoin is, I don't get it. Frankly, I think it's going to blow up. The only reason it's going up in value is because people who are buying it are assuming that someone will pay them more than they paid for it, and that's what's driving the price up. But there's nothing backing it. So it's like everything else. We've got a bunch of inexperienced investors out there who are driving this market up. So I'm being a little cautious about that, but at the same time, with the tax code changes, the regulation changes, and one of the biggest issues is going to be repatriation of money that corporations have overseas. They're going to want to bring this money back to the US and put it to work. It's going to make sense to do so, and they've got a limited time frame to do so. So I'm expecting this next year there to be a lot of cash inflow into our country as a result of the repatriation of this cash. Could also cause another problem. As that money wants to come back, it's currently being held in other currencies like the euro or the sterling or other currencies. In order to bring it back, it's got to be brought back in dollars, which means that these corporations are going to have to convert those foreign currencies into dollars. That's going to make there to be a demand for dollars. As there is a demand for dollars, that's going to cause the dollar to strengthen. And as a result of that, could be potentially an issue to look out for with our multinationals, may not be as profitable. Things that you can touch, commodities, won't do as well because the dollar, when it gets strong, they're priced in dollars. So that's kind of a negative. So with all that said, there's a lot going on, a lot of optimism. Just wanted to kind of tell you about a couple of things. I feel pretty good about this coming year. I think it's finally a green light. So I'm going to start doing some things a little differently. I'm going to get a little bit more aggressive until I see a reason not to. So I will come back and talk to you at the end of this quarter. I'm anticipating things being good. They may not turn out that way. We could be at war with North Korea. Who knows? But that's just part of being on the planet. Anyway, just know that I'm always looking at everything. I'm always taking care of what I think is the most important thing, your ability to purchase goods. That's your money. So I will come and talk to you at the end of this quarter. Until then, you have a great, happy new year.